Wednesday, April 19th, market analysis, Stan Ehrlich. Good morning. Doing it a hair early this morning, 9:32 California time. We always start with the stock market indexes, the Spider, the Dow Jones, the QQQ, and sometimes I pull in the Russell 2000. This morning, we opened lower, couple points. Dropped off below the low of yesterday, which was sort of a failure to hold new strength, new highs for the short-term trend last couple of months to the upside, last month and a half, something like that, in an area of resistance. So I'm not surprised that it didn't hold the opening strength yesterday morning. Excuse me, people, sneeze. So it ended up closing poorly, not necessarily terrible. And with this morning, there was downside follow through, and we opened a little bit below yesterday's low, but that's about it. It ended up bottoming out very quickly. We have a rally so far for the first half of the day up to about unchanged. In fact, we are at this moment approximately high and last, and we've made the new highs for the morning, for the day, in the last few minutes. Down 13 ticks is nothing. It's basically unchanged. Gets stronger. The bull market continues. We'll have an upside breakout, be making new highs for over half a year if we can get over this high that was made on February 2nd. And that's going to be about 418 and a half. So round it up a bit, 420 is real good long-term bullish news. But I think we've got a problem for the moment, and I've been saying that for a week. We're overbought a couple different times. We've had two bearish engulfing sell signals. One worked a little bit, the other one didn't work. And we have been overbought a couple days ago. Can't hold strength. Current quote, hardly any change whatsoever. Yesterday, you were up a little tiny bit. The day before, you had a new high closed by a very small amount, but not in new high ground yet. Then the next day, which was yesterday, you did get new highs, it wouldn't stay there. So this area is still resistance and showing us some problems. Is it really going to break down to the gap closure I've been talking about, down to 396 and a half, 397? There's still a good chance of that. It's not that far down, 20 points. We used to get 10 and 20 points once in a while, once a week or more during, other market conditions. So it's not that far away. Just because they've been quiet and relatively dull, well, for the last several weeks, couple weeks, doesn't mean it's about to stay that way. All right, DIA. So I'm still voting for the downside correction to close the gap, maybe a dip of around 20 points. And DIA is what we call an inside trading range day. No higher today than yesterday's high and no lower today than yesterday's low. And it's really gone basically sideways right now, down 76 cents, not even a dollar. So we have these gaps to close at lower levels. One around the bottom of the trading range for the last couple of weeks, around 333 and a fraction. There's another one, 329 and a quarter, and as low as, and this one seems to be a little farther away than I'd be willing to admit it's going to get closed, 322. But the other two with the blue insides, and they're a little bit more appropriate. Whoops, I made a mistake here. That is not a gap. That was already closed. It's this one here, 329. That's not too damn far away. It's quite plausible. Now you've had three bearish engulfings. Remember, I claim, and I've seen this happen for the years that I've been working with this trading system, ER signals, that they cluster within approximately a month. You can see two, and now three in this particular case, and rarely four reversals in the same either bullish or bearish direction. So this is adding more validity, if you will, to the likelihood, and those are both ambiguous words, that we're going to see a break and it should happen any old time now. I was expecting it to happen earlier. QQQs, pretty much the same situation, except keep in mind, the Qs have been the strongest for months now, higher highs, staying there, making more progress. The downside corrections weren't as severe a percentage of retracement as the other indexes. So the bull market from October 13th is incredibly great. ER buy signal, our green bar. I screamed bloody murder on that day. Go listen to my recording, October 13th. That still stands as the beginning of the bull market for 2023. And that is my long-term opinion, period. But where are the kinks here? You know, where are the small short-term up and down moves? And I think we're about to have a small, minor downside correction to close some gaps. That's it. That's my opinion. Unfortunately, at the same time, I'm not going to complain if this market just jumps in a new high ground completely. The problem here is being very cautious about the position that you've got. If it starts to work, whichever way it is, I'd be very enthusiastic you're going to get more out of it. On the downside, you're going to see new sell stops being hit and minor downside breakouts to close gaps. On the upside is just basically a perpetuation of the long-term bull trend. Okay, futures. Futures market. The S&P up against resistance, talked about that a few moments ago. Having a little bit of a problem, not much, but it's stalling out. It's losing upside momentum, we can say that for sure. Do you have a sell signal yet? Oh, on the verge, maybe. We'll see soon, I expect. Next chart. We've got the interest rate futures dropping off a little bit more this morning, making minor new lows, but still right smack dab at support. So breaking the lows of today on a closing basis, which still could be today, would be a little bit more bearish. And I don't mind that because we're awfully close already to being oversold. So one more jab down, washing out sell stops below the market, 128, 126 ballpark area probably is going to produce an oversold condition and produce what I hope to be a very good buying opportunity and maybe the last significant low before the market ends up making new highs for the whole damn trend above 134. I do believe the interest rate futures are making long-term bottoms. And if it turns out to be a flat top right triangle, so be it. But that's one formation that could be forming. You got a trend line running up across the bottoms, but you got a top that's got 1, 2, 3, 4, 5 time periods that it's stopped approximately at the same prices. That's what we call a flat top right triangle. Next chart. Same thing for 10-year notes. No surprise. Maybe not quite as obvious. The lows aren't quite as accelerating upwards. But we're right at support at the moment. Basically, the same comments go for 10-year notes as they did for bonds. Let's go for the next chart. Is crude oil. Now, we're starting to close that gap I've talked about for, 2 weeks now. And just a little bit of the gap is closed this morning, but it appears we're going to have a low close, kind of a downside breakout, modestly important, really only to the level of closing the gap. I want to see it come down to pretty accurately 75.75. That'd be nice. Maybe a little lower, but at least 75.75. It might get oversold if it can get there quickly, and that would be a pretty decent buying opportunity. Now, the long-term trend here is still intact as being bearish, but not strongly bearish. It's a fairly weak trending down bear market. It's quite a while before you see not that big a deal, new lows over 2 months later, 2 months later, 2 months later, that kind of thing. But this last rally did get through the resistance level decently. It stopped, and now we're seeing it come down to close the gap. But what happens if it closes the gap and turns back up and gets above this red zone here and starts trading at 74 and 75? I'm at 84 and 85. Then you have the decent potential probability of a bull move starting. Next chart is heating oil. Not too much to say, frankly, except, wow, we got some great signals out of this top of the rally back on January 24th, red bearish engulfing ER sell signal. This is an automated trading system, people. You just sit back and watch. If you want to make trades based on the signals, that's what it's for. If you want to use the automated trading system, the ER1 and ER3 program for TradeStation trading system, they're available. We have almost the top of the market, missed by 2 days. And back here, we have the top of the market on June 17th of 22. That's a pretty damn profound, accurate timing for those signals. Next. Also, the top of the market in the natural gas way back here on August 23rd of 22. Now, we had a buy signal lately that worked okay, a couple of weeks. We came down, we made minor new lows. Didn't have any downside follow through. And that little blue line is the previous resistance. Now, for a day and a half, including today, 2 days and a half, we're around or higher than that resistance level, which now is turning into support, possibly. If it bounces off of the current quotes and starts to make minor new highs, you're developing what could be a significant bottom of some sort. Too early to tell. The trend is down, but very mildly. That's about the best I can say here. I haven't got any great signals at the moment. Next. Minor new lows for a few days on gold. But remember, we've gotten some significant sell signals in silver. We'll show you that in a moment. The profound situation here is we had an outstanding buy signal on February 28th at the bottom of the break. And, of course, a sell signal at the top of the rally. I'm kind of hard-pressed to find another system that provides those signals for you automatically. Next. Bottom of the silver market, again, low day, March 10th. Now, we've had a sell signal a couple of weeks ago that didn't work, and another one that didn't work, and this last one is working perfectly so far. We have a little bit higher quotes at the moment, and we do have an outside up trading range day, but nowhere near oversold, so I'm not getting a buy signal out of this. Granted, bullish engulfings are typically bullish by themselves, but there's other overriding often circumstances that I look at, and we've got them. The overbought condition for weeks, as well as a bearish engulfing at the top of the move, says this market should start to come down some more. That's what I'm expecting on a short-term basis. Now, the low this morning was at the beginning of support. Look back here to a bunch of these highs right around the low of today. And you can go back even further to April of last year, a year ago. So that's significant. The trend is now up. I don't know. So far, this sell signal provided all the opportunity to make some money past tense that you would want for a day or two. And the system is originally built for relatively short-term trades. But we find historically that it produces signals for long-term moves as well. Next chart. Platinum. Of course, we got the bottom. All the precious metals. This one was February 27th. Today, I'm smiling. New highs for the whole trend up. But remember, please, we're getting overbought. I'm fully expecting a downside retracement. Oh, it might even be as far as 1019, but probably a little bit higher than that. I'm thinking it looks, well, that's the best I can say for the moment. I would not be surprised if we get a red bearish ER sell signal. I have to watch for that. We're up against resistance almost, not quite. We're just getting, for the last couple of days, into overbought territory. Not too badly yet. So this is about to turn back down somewhat, but the good part is we got the damn bottom on February 27th, and this is the highest high since. Next chart. Cattle. Brand new sell signal today. Watch out. We have overbought conditions a few days ago and yesterday and this morning. And it today has turned into past tense, a bearish outside down day, bearish engulfing, overbought ER sell signal. Period. All you need to know is it turned red. So I'm turning bearish on cattle as of now, today, this morning. We're already low, just under yesterday's low for ER1, so that's making money already. The market's not closed, so I don't have a handle because it's an automatic calculation as to what price you would consider going short in the next few days for ER3 trading system. But ER1's already short the day of the signal, the day of the red or the day of the green. It doesn't miss the beginning. Sometimes the trades or signals don't work and it loses money, but we're in, if it does have a good signal, at the day the market turns. We always have. A smart trailing stop, we call an STS, every second that the trade is on the books. Next chart, high-grade copper. Boring, next chart. Soybeans. Previous buy signal starting to work a little bit better. Not one of my better signals. Nothing really super wrong with it, except it happened nowhere near the low of the break, which I like a lot, of course. Neutral to friendly. Next. Soybean oil had a buy signal that worked only for a day or two, and now it's failed to make a new low for the trend. So it could be trying to have a better, bigger rally than we've seen in the last month or two, but the overall trend is still very much down. And if it gets overbought, maybe even gapping up, that kind of combination of things, I'd be willing to go short around 60, maybe 61, if it can get there. Next chart, corn, overbought, watch out, but it is breaking a long-term bear trend line. So that's something to consider. When that happens and you're overbought at the same time, you can get another day or two of overbought conditions and some upside follow-through because of the bull trend starting. That's what the implication is here. A long-term bear trend line is being broken. We'll see if it hangs on and makes new highs in the next day or two. That would be pretty convincing about the bull move that seems to be past tense started and maybe going to continue significantly. Next chart, wheat. A lot of resistance overhead. Today's a down day, kind of neutral at the moment to bearish. Next chart, soybean meal. Statement is neutral to bullish. Next chart, hogs. Not quite oversold. We were oversold, and here's an example of potential divergence. You have a low-end price that happened on March 23rd and a very low in the RSI or the oscillator, in this case, the custom version of relative strength index that I created in the last couple of decades. I learned RSI from Wells Wilder himself. All right, next time down to new low prices, the RSI or the indicator, the oscillator, did not make a new low. That's called a divergence. And we actually have a potential triple here, a new low today, price-wise, but not, again, another lower low on the indicator. No buy signal, no reversals, no oversold condition today, only this interesting divergence potentially developing. Might get a buy signal out of this real soon. Next, OJ, told you to get overbought. Don't trace it up. Watch for sell signals. Didn't get any per se, but now it's starting to come down even more. Today looks like it's going to be a new low close for a couple of weeks. So I expect to see more downside pressure, but the trend is up. It's a bull market, and I'd love to get a buy signal on a break. Next, cocoa. Pretty much the same comments, but it's not quite overbought yet, but getting darn close to it. Very close to it. Next, overbought for, wow, 2 weeks. It's really frustrating when you're bullish on a market and you want to buy it, and all of a sudden you see indications that it's likely to be coming back down a little cheaper soon. And that's exactly what happens when you get overbought conditions. And then all of a sudden it doesn't do that. It just keeps going and going and going. Well, for one thing, you didn't lose any money. For the second thing, I know it's frustrating as heck, but you're also following your disciplines. And the third thing is, if you had bought it and it does what it usually does, like back here, like back there, like back there, like back there, and that's a sell signal right in there, right up the top of that rally. And even back here, you got a sell signal at the top of a rally on the very far left edge of this chart. And I'm going to pull it in if I can get it to work. There we go. Oh gosh, that's out of a great rally high. Well, whopper, in fact. When was that? April of last year. Yeah, April, almost exactly a year ago, April 14th of 22. Whopper of a sell signal. So that could very well happen now. Look at this overbought condition. It's super overbought. The downside correction is going to be very big, probably back to 21. Frankly, I'm very optimistic of catching a new short sale. You missed what you missed. Don't cry over spilt milk. Next chart. That's it. And I want to point something else out. I'm going to get forex in here for a moment. We have the second bearish engulfing for the euro dollar. EUR USD 2 days ago, three days ago, had an outside down day bearish engulfing that's worked great so far. On top of that, at the moment, we do have a mild bearish engulfing ER sell signal. It's totally legitimate. It doesn't look very profound at the moment. And now you've got two at what could be a pretty significant retracement. There's a good chance it could come all the way back to 105-ish. And from 9.5, that's a pretty profound move. It's going to probably take 2, 3, 4 weeks, 6 weeks, a while, if it works correctly. But we pegged the top so far. That's what I like. And by the way, we got the bottom September 28th of 22. Come on, people. You can't do this often. That is the bottom of the bear market, like October 13th for stocks, for many, 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 many years earlier. And on that September date, we had a green bullish ER buy signal, September 28th to 22, and the euro has been higher since. But we got a little trouble at the moment, sell signals, so momentarily I'm bearish. But the longer-term trend is minimally sideways to at least somewhat higher, if not a longer-term bull move. We're not finished yet, I don't think. That's it. Have a great day. Talk to you tomorrow.